Welcome back to my channel. Today we'll be talking about the best entry model strategies for both crypto and forex trading. First of all, I'll draw the face. I'll first draw the entries, like draw it plain, then explain and show examples with live charts. So let's dig into it. The first entry is the order block entry. This is for the buy, and I'll also draw for the sell. Sorry. Okay. I think I should have gotten this ready before now. I just wanted to draw it while talking. So I'll explain the concept behind each of these drawings so that it doesn't look like it's something you don't understand. By the end of the video, I believe you would understand each. And now for the last one, I'll be drawing breaker. Breaker entry is stuff we don't normally use. We don't use breaker entries are not actually the best entry model type. There are actually rules to use breaker entries, but I'll just draw. Mm, mm, mm. So these are all the entry model. This is advanced SMC entries, and we're explaining the concept behind each of them. So for the first two, this is a buy. This right here is a buy setup using order block. So the major concept behind this would be, if you want to take a trade with this order block entry, first of all, you there is no much consideration for this block, for this break of structure. This first break of structure is not actually important. Is not actually important as long as this trade is reacting from a valid reversal point. As long as the trade is reacting from a valid reversal point, or it's a continuation entry because price is coming from a valid reversal point, you can take this trade. But this type of entry is not a reversal pattern, it's a continuation entry pattern. So the first break of structure, it's not really necessary. What's necessary is the break of structure after liquidity, after inducement. What's inducement? This is our inducement right here. But first of all, so we'll be asking, what's inducement? Inducement is the first pullback after a break of structure. The first pullback. And I say the first pullback, but I also say that this break of structure, it's not really important, but most times to be there, it will help you like further confirm. But don't overemphasize on the first break of structure. You just want to make sure that your inducement, the first pullback after the break of structure, the first pullback, you need to make sure that it's actually broke structure. So this is inducement, and this is the first break of structure. This is the break of structure that is more important. But let's say price broke structure here, price broke structure here, and this is the first pullback. This is the inducement, and the inducement broke structure too. This is very important in taking these trades. The inducement into break structure, either you have your inducement breaking structure, or you have your inducement going at least 50% of the targeted high. So if the high is not protected, the high is the target. So let's say you're regarding this place as your inducement, and price just went up here and couldn't, like, just went up here and started falling. This trade is not valid at all. At least this price should push 50% of the move before coming down. But still yet, is best if it breaks structure. That's the best. But if you're to take a trade without it breaking structure, make sure that it moves at least 50% of the move, of the entire move. And this is the textbook structure. This is textbook structure. I'll get into the live market chart example, and let me explain the sell. The sell is practically the same thing. There should be let me get it. There should be a move right here that will consider the first break of structure. But like I said, it's not really important. If you're always waiting for it, you might not see it. It might be just a week or something that you will mark at the break of structure. We'll see it in live chat. That's why I don't pay much emphasis to this. Instead, instead of paying attention to this, we pay attention to this. Okay. In this case, look at we have this break of structure. This is the break of structure, the BOS, and this is the first pullback. The first pullback after the break of structure. This is our inducement where the price come into to tap and start its move. Price came into the other block at the protected high. In sales, the high should be protected. In buy, the low should be protected. How is this high or lows protected? They should have liquidity. They should have inducement. Inducement is what shows that another block has higher chance of being respected. That's why inducement is very important in each of our trade. So if you notice in this my drawing, the inducement broke structure. The inducement also broke structure, which is very good. You see, sometimes inducement can be single, can also be a single candle. Inducement should be I can be either a single candle or a cluster of candles moving in the opposite direction after the break of structure. Sometimes we have rare cases of inducements coming before the break of structure, but those are a lower probability setup. So if you're a beginner and you're going to crypto forex, it's best you start with the one that you know works well. Maybe over time, through experience and other things, you can start seeing others. So first of all, let me go to live example. I don't like trading 15 minutes, so I'm going to go to I'm going to go into a higher time frame. But before I go into that, let me show you an example of my okay. Let's say for example we have this right here. This was a short reversal point because this was a short reversal point because price is trying to create inducement for the main move. Although this stuff missed during the news. It actually missed. I was holding this. I was trying to get this setup, but it missed during the news. But this place on this, I saw it set up on a higher time frame actually. 1 hour. Let me go to 30 minutes so you can see the other block. This is the block I'm taking my entry from. We go into another lower time frame. What you see right here as a single candle would be like this. Let's go into lower time frame and check. What you're seeing as a single candle, like I said, will be like this. So let's draw it out so that you can see the. I'll go to 30 minutes. price have broken this structure up here. As like I said, it's not actually the most important thing because it can actually be just a little candle break of structure that is actually the value stuff. And this went also broke structure. All was expecting is price to come in and tap the other block and move. If you can check very well, you see that that's exactly what's here. That's exactly what's there. So I saw an example. I'm going to give you the example too. Let's say you missed or you just wanted to catch an extra move in the market. You go down to your 15 minutes and you see price after sweeping the liquidity, one of the liquidity price started moving up, and you just want to get in case price isn't coming down to tap the entry. Look at other entries here. We have a break of structure. Have a break of structure. After the break of structure, what the first pullback? These questions you ask yourself. What the first pullback? This is the first pullback. You have our inducement. Now our inducement, and did our inducement break structure? Our inducement broke structure. So what are we expecting next? After this, if we can cover this whole side out, was where are we going to pick our entry from? We'll pick our entry from the other block, an unmitigated other block. There are actually rules in picking POIs, in picking this continuation POIs, like some of the rules. Let me let me get let me there's some of the rules of picking your entries. First of all, the POI, your entry, your other block needs to trigger a break of structure or a market structure shift. A market structure shift is when price moves in the opposite direction of the trend. When price breaks structure in the opposite direction of the trend. For example, it has to break a key structure too. It's not only break of structure. Some break of structures, as I've explained, are inducement. So it has to break a key structure in the opposite direction for it to be recognized as a market structure shift. But let me explain. For example, this example is a break of structure, not a market structure shift, because it broke structure in the direction of the trend, not in the opposite direction of the trend, and it broke a key level in the direction of the trend. This is a break of structure, not a market structure shift example. But I'm just trying to tell you that it has to, the POI has to break structure. I mean, let me get the rules that probably can copy it yourself. These are the rules. Mm, sorry. Mm, what? Okay. So the first rule is that the POI needs to trigger a break in market structure or a market structure shift. The question is, did it trigger a break in market structure? In case the question is hard, maybe it's your first time hearing it, it triggered a break in market structure. You can see the break in market structure right here. Right here, you can see the break in market structure. So, true, it triggered a break. The POI triggered a break in market structure. The next question is, it has to trigger. Okay, sorry. The next one is, it needs to have liquidity protections, and I've also explained that the liquidity or inducement is the first pullback after a break of structure. So it has inducement protecting it. The next question is, it has to be unmitigated. What does mitigation means? It means why price was maybe creating liquidity, or the inducement is not supposed to have tapped into the POI. That's what it means. It has to be unmitigated. I don't know if you're let me explain mitigation. For example, after this we had the setup, price came here and tapped this other block. Then we say the other block has been mitigated. So in the course of creating liquidity or moving, price should have not tapped into that entry in that process. That what mitigation means. Then it has to be close to liquidity. Your POI has to be close to liquidity. What does it mean? This is the other block close to the liquidity. You have another block here close to liquidity. Picking this other block as your entry because there's another block doesn't make sense because you have another block that is close to liquidity. So you have to pick from the other block that is close to liquidity. I believe that explains it. Let me get this out of the way. So that's what that this is the rules. This is rule for picking a POI, and you can see that this entry satisfied each of these rule. I think time frames are fractal. If you go to lower time frames, you will see more and more entry. Now there is trick to using lower time frame entries. You need to make sure that the POI, for example, this entry right here, price tapped into a POI, you can go into a lower time frame to find confirmation entries in order to take more buys in that direction. So that's how you can use lower time frame. But for it's best you go lower as 15 minutes as the lowest time frame if possible. So after price tapped into this, what do we see? After price tapped into this, you can target the last high, and this is 6 hour trade, a way of leveraging going to your lower. That's why you won't see all this if you trade too much pairs. You can see I trade few pairs. From time to time I can go lower time frame and check stuff out. So this is actually an entry, a perfect example of the buy setup. Let me check if I will get an example of the sell setup. Let me check if I get an example of the sell setup. GBUSD. And GBUSD, I think that was an example of sell. With this GBUSD, I'll be explaining this pattern we have right here is a reversal pattern. This is not a continuation pattern. For example, with this pattern, we'll see a sell trade right here. I actually took this trade. We see a sell trade right here. Even though the market direction is bullish, we'll see a sell trade. There are other reasons, not only seeing the structure, there are other reasons that makes you decide that sell should hold. There are other reasons, but beside that reason, what the first thing we need to find is the structure. Before there will be a reason, we need to find the structure. The reason why I took this sell, but and this sell pattern is a reversal pattern, is not a continuation pattern. So if you see this, for example, price is trending, is doing this, is creating but this protected low, breaking structural levels, key levels to the upside, and let's see price does this, doesn't mean you should take a sell from here unless this particular POI or this other block tapped into a key level for reversal. If it tapped into a key level for reversal, that's when you could take a continuation entry. If not, it will definitely liquidate you. Just a trap to definitely liquidate you. But this entry model is not. It's not. This entry model is not a continuation entry, but rather it's a reversal entry. So exactly this is what is presented in this chart right here. Let me explain. Okay, for the first part, I always say the I always say this first break of structure. I always say this first break of structure is not is not really important. For the reversal pattern, the break of structure that is important is the break of structure after the sweep. After the sweep. Let me show you in this. You can see the example right here. You can see that price price didn't break structure immediately after creating this. What the price do? Price created the sweep. After creating the sweep, price broke structure, and you can see the structure broke this first low, broke the second low, which is an added bonus for not this not coming lower or something. So, but it was a very nice entry, very very nice entry. After the break of structure, this one we call it the structural liquidity. What happened to the structural liquidity? It's also a type of liquidity. We have inducement, we have structural liquidity. What it's the structural liquidity needs to retrace at least 50% of the move before moving downwards. Like I said, at least 50%. It's good if it breaks structure, but at least 50%. After that, price will come in, and if this other block that failed, this other block is a key zone that's supposed to have pushed price downward, but instead price broke it and started reversing downward. So next time price is coming to retest, as long as the structural liquidity doesn't tap into the QMR, as long as it doesn't tap into the QMR, it's valid for another sell. It's valid for the sell. So someone that didn't cover the whole thing and just cover the QMR will still take this trade, make higher RR, and win it sell. But it's very wise to cover the protected low, the protected high or low, to avoid any surprises, because the market is full of surprises when you're not prepared. So instead of risking doing 10 RR or hitting SL, better you just risk it and just take out for RR. Or I think like I did 4 RR on this. I knew that price will retrace downward. I think I explained the Fibonacci range theory in one of my videos. I knew that price will retrace downward, but this is the reversal pattern. What the pattern made of break of structure with a high that's supposed to be protected. Price will break. Price will break. A high that's supposed to be protected. Though a high will be created that's supposed to be protected. Price will break the low that formed that high, then goes back up to break the high that's supposed to be protected. That high is supposed to cause a sell. Price will break that high and immediately dump. After the dump, it should either break structure, the dump should break structure or move at least 50% before moving up again. In this example, it didn't break structure before moving up, and the movement up should at least be 50% of the move or 60% or 70%, but it should not tap into the last order block. The situations in which structural liquidity will be in the same line with the QMR, and when that stuff happens, you know that you can refine your entry to the other block in the protected high instead of using the QMR. So that you will know what to do depends on the position of your structural liquidity. Your POI would come tap into the QMR or tap into your protected low. That's why you could cover the whole stuff, the whole high, and dump. That's the rule. It also explains if you can just turn it upside down. Don't invert scale. Turn my chart upside down. You can see the same thing. I don't know if it's confusing, but as I'm looking at it, I'm also seeing the same thing. A high was a high was created, a low was created that's supposed to be protected. What the price do? Price moved up, came back instead of using that low to push up. What price swept it? Immediately price swept it, price started pushing up. After price pushed up and broke structure, of course you can see here our break of structures here. Price pushed up and broke structures. It broke this, it even broke this. after price broke structure, what the price do? Price retraced at least 50% or more, creating structural liquidity. We call this one structural liquidity, still liquidity. We like call it this one structural still liquidity. And the structural liquidity didn't tap into the QMR and didn't tap into the other block in the protected low. That's a very good sign that that zone is unmitigated because of the key factor there. Unmitigation is very important. So price came in, tapped it, and pushed up. Okay, that's very much it. That's very much it. I didn't even I forgot I could do that if not, right? I could do that. On my explanation here for the sell entry, for the sell entry, basically the same thing. Basically the same thing. The POI needs to have this is a continuation pattern. That one I showed you is a reversal pattern. A reversal pattern. And there are other reasons. I'll make more videos next week explain the other reasons for this. But for now, this is with this alone you're good to go like 60%. It triggered the POI broke structure. After the POI broke structure, what else? The inducement was protecting the POI. Let's read the rules. It has to trigger a break of structure, market structure shift. It trigger the break of structure. It needs to have liquidity protecting it. And this high liquidity and valid. Liquidity even broke structure. Liquidity did not tap into the POI. Liquidity moved about 50%. Liquidity moved about 50% and still broke structure. It didn't tap into the POI, so the POI is unmitigated and the POI is close to liquidity. It's very important. So that's it. That's the entry. You can go and backtest this on you can backtest it on crypto forex and you will still get the same results. See you on the next video. I'll be explaining more.